Brexit has happened. So should you worry and should you do anything? Well, here to work through that is Joe Bersalis. He's chief economist at RMS. Joe, pretty surprising what happened overnight. We've been talking a lot about what this means for the European economy and for the British economy. Let's expand that out. Tell us first what we need to know about how this will affect the U.S. economy.
Well, I think that the U.S. economy only has indirect exposure to what's going on in the U.K. and perhaps in Europe. I think the major problem will be in the manufacturing sector. Should the appreciation of the U.S. dollar be sustained, that means the terms of trade have changed and they're not in our favor because our goods just got more expensive.
Yep. But you're not saying this does not put us anywhere near a recession, right?
Oh, no. Even though we've had an initial shock this morning, I don't think that this will trigger a U.S. recession, not by any means.
So a lot of people are, they're thinking, what should I do about my 401k plan? Maybe I'm not an active investor every day trading, but should I get in there and rebalance? Should I do something? What should ordinary people do about this?
Well, I looked at it this way. It's like before I came over to the studio, I saw that the Dow was down nearly 500 points, and I'm thinking, this is just rational overshooting to the downside. This creates buying opportunities for blue chips, the consumer sector, probably oversold foreign stocks. I think would really get some opportunities.
So, and of course, you never know when the dip that you want to buy has ended, right? So do you think we're going to see further declines over the next few trading days as everybody tries to figure out what the implications are here, or do you think this could be a quick snapback?
Well, I would lean towards further consolidation and some losses. We want to see what happens in the Spanish election on Sunday.
Yep.
And then this is probably going to be just a temporary multi-week, say 2 weeks of volatility, and then we'll start to work our way out of it.
Okay, so what are you telling your clients for, 3 months out?
All right, well, our clients are largely in the middle market, right?
Yep.
Those are firms with 10 million to 2 billion in revenues. What we're telling is make sure that their lines of credit and lending secure in case there is a low probability event does happen, so they can meet inventory and payroll. But beyond that, just sit, wait, and watch, and we'll be in contact if we see anything that really represents tail risk.
So everybody's kind of wondering how this might affect the U.S. election here. So come November, election day, what will this situation look like, do you think? Will the UK be, will the UK, for example, look like it's a lot worse off?
Well, my sense is that this will cause a recession in the UK, a very shallow but technical one, 2 quarters of negative growth. My sense is by the end of the year, that's where the UK is going to be. Not so much of an impact here on the political side. I think that the major takeaway is that what we saw was what's called preference falsification in action.
Spell that out for us.
Voters who socially aren't comfortable with expressing their true belief, once they step behind the curtain in the polling booth, do. And that's why the polls, which said Remain would win, didn't account for that. And from time to time, we see that.
That basically means some people didn't exactly tell the truth when pollsters asked them what their position was, right?
That's right. The polls were right as far as people were willing to tell the truth. And you could see this in the run-up. Because when they ran the telephone polls, Remain would always win. But on the online, anonymous internet polls, it was a dead heat, and Exit really had the initiative for a very long time.
That's interesting. So let's real quickly just go through who else might be winners and losers on sort of a global basis.
Well, okay, so I think that the losers are very clear. It's the UK. The Japanese.
Why the Japanese?
Well, because the Japanese yen is a funding currency, and we saw a sharp appreciation in the value of the yen overnight. What that means is Japanese exports just got very expensive, and they still export several $1 billion a year in worth of finished goods to the United States.
Right. Okay. Any winners to talk about here?
Well, the United States, in terms of fixed income investors, may be a winner because we did see the start of a major flow and a safe haven move. We busted through 1.5% on the 10-year, and we're probably setting up for a test of the cyclical low of 1.38.
And that means interest rates and borrowing rates are going down, right?
That's right.
Mortgage rates?
Refis for everybody here real quick. And perhaps this will spur some of the first-time home buyers who are on the fence to get in the game.
Yeah, that's an interesting second-order effect. Folks, tell us what you think about Brexit. How is this affecting your personal finances, if at all? Let us know in the space below or look us up on Facebook and Twitter at Yahoo Finance.